Good day, ladies and gentlemen. So today I want to give you a trade idea, a strategy idea that you can actually work on, and you could even make it a strategy because it's actually very simple. All right, this has to do with trading single candle ranges. Okay, so as you already know, every candle is a range which you can actually find some form of accumulation, manipulation, and distribution within it. All right, but I won't be going into the complex aspects so I don't confuse you. The aim of this video is to give you a very simple system that you can use to trade. So what will the strategy be based on? The strategy is going to be based on, number one, it's going to be based on the fact that when a market is actually trending in a certain direction, okay, if it's a downward direction, you would notice that the highs created will never be taken. Okay, the highs created will not be taken, and if it's an upwards direction, you would notice that the lows created will not be taken if the market wants to continue in that direction impulsively. Okay, so what do I mean by this? Look at this downtrend right here. Look at this downtrend as market is moving in a downward direction. The only time the high is going to be taken is if the market enters a momentary consolidation. Okay, but when it is moving in its impulsive phase, the highs are always respected. Okay, so look at this right here. This is an high. The high of this bearish candle was not taken. Look at where the wick of the second candle stopped. The wick did not take this high, so it displays downwards again. Only the lows will be taken in a downtrend, leaving behind this high right here. The next candle did not take the high. You can see the next candle displays downwards, taking the low, creating a new low. Hope you can see what I'm pointing. Let me use an arrow. Let me use an arrow to point it out. So look at this high right here. The high was not taken by the next candle. So the next candle created a new high without taking the previous high. Okay, you can go to your chart and check this. It happens all the time. Then the next candle that formed did not take this high. Instead, it created its own high. Okay, so it keeps going down like that. In the same vein, this high was not taken. Instead, a new high was created, leaving behind this high. So this new high also was not taken by this new candle. So it keeps going like that. This is like a momentary pause in the move. So it is okay for this candle to come up to its high. Alright, so it displays downwards. The next candle did not take the high, instead it took the low. Okay, so an understanding of this will give you an idea of where price wants to go to. This is the 15 minutes time frame. You can do this on the 1 hour time frame. You can do it on the 4 hour time frame. As you already know, price is fractal. So I'm trying to give you a strategy idea that you could develop and work on your own. You have to go back to your chart to work on it. So let's say you're doing this on a higher time frame, probably a 1 hour time frame or a 4 hour time frame, okay, which is a considerably big time frame. What you then do is, once you've spotted it that this market is trending downwards and the highs are being respected, what you want to do is, once one of the candle has closed, if it's a 4 hour candle, once that 4 hour candle has closed, you want to mark out the range of that 4 hour candle. Let's assume this a 4 hour candle. Now you mark out the range like this from this top. So let me copy that to this bottom. You mark out the range. Okay, so once the range has been marked out, now you've marked out the range of this particular candle, right? So the next thing you do is you go down to a smaller time frame where you can see minute movements of the market. So you're trying to take advantage of your understanding of the fact that if it's a downtrend, a serious downtrend, the high will not be taken. Okay, so I wanted to give you something from the beginning, but it skipped my mind. The very first thing you need for this strategy is the fact that if you are in an impulsive downtrend, the highs will not be taken, and if it's an impulsive uptrend, the lows will be respected. The lows will not be taken also. So that's the first thing you need in order to apply this strategy. The second thing you need, which is what skipped my mind, is the fact that when a candle that wants to be bearish opens, most of the time it will move in the upward direction a bit. It will move in the upward direction a bit before displacing downwards. That's why most of these candles, these bearish candles you see right here, most of these bearish candles you see right here, you would notice that they have a small wick on top of them, small wick on top of them. You understand? Showing you that when the market opened, it moved upwards a bit before displacing downwards. So those are the two things you want to play with. Those are the two things you want to work on in order to create this strategy and work with it. So when the 4-hour candle has closed, for example, if you want to use 4-hour time frame, you can use any one you like. You can use 1 hour if you want. Then you step down to a 5-minute candle. Once that 4-hour candle has closed, you can step down to 5 minutes time frame. So on the 5-minute time frame, you are expecting a bearish candle to follow, but that bearish candle, you want it to move in the upward direction a bit. So you're going to see bullish candles at first. Remember, your overall bias is bearish from the 4-hour time frame. So you want to see your candles giving you what on the lower time frame, which is maybe 5 minutes or 15 minutes. You want to see a bullish move first. Okay, so that bullish move is going to create a wick. So once the bullish move is coming in, you want to study the movement of price to see where it's going to change character and break structure. So once there is a break of structure or a chalk, okay, a change of character, that is when you want to enter your trade. So you're going to still apply the usual ICT change of character system, whereby you wait for a change of character. Probably you look for an FVG along the displacement leg that brought about the change of character to then enter. All of these is going to be playing out on the lower time frame with an understanding of what I just explained on the higher time frame, that okay, the high will not be taken, the lows will be taken when you are in a downtrend. So you have to merge the two. I hope you understand the explanation. Okay, if there's any part that is giving you some kind of confusion, you can drop that in the comment section. I just gave you a trade idea. It's an idea that you can build on to create a strategy which you use to trade the markets. Okay, so if you got any value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.